they would have missed out, and they were going to say no to saving over $50,000. $50,000. And why were they going to say no? Because this is a follow-up to my previous video, how to refinance, save money, lower your rate, or get rid of PMI. If you haven't watched that yet, I'll put it in the link below for you. And don't worry, if you're watching it out of order, it's not a problem. Stay tuned to the rest of this video. For your one-stop shop, anything and everything mortgage education, please be sure to subscribe to the channel and hit the bell to be notified as I post new videos every Tuesday and Saturday. I'm here to help you, your family members, or anyone that you know, love, and trust get the best mortgage experience possible. My name is Stephanie Weeks. Why should you care what I have to say? Well, my mission is to spread mortgage peace. And did you know there are over 300,000 loan officers in the nation? Well, for the last several years in a row, I've been recognized as being in the top 1% in that very large pool. Stay tuned for more information and education on anything and everything mortgage related. If you are like most people, you have probably heard, if your interest rate's not dropping by at least 1%, you should not refinance. Guess what? Absolutely incorrect. So, with this video, you're going to learn why that is so incorrect. It is an incomplete statement. The statement should be, don't refinance your home unless you have analyzed the full situation, looking at your goals to determine if they're long-term, if they are short-term, what's the cost versus the break-even, keeping your loan that you currently have or refinancing, which puts you in the better financial situation, how long do you plan on keeping the home, how long do you plan on staying in the home, which can be different than keeping the home, right? All of those things matter. That's what you need to know. Well, I'm gonna share with you guys a couple of case studies in this video to give you specific details, because you know what? If it applies to you and I can help you save $5 or I can help you save 5 minutes of frustration, I have reached my goal. So I don't know about you, but I think this topic is super cool. And on that note, I'm gonna wear my sunglasses for this one. And no, it's not so that I can glance at my notes. Well, maybe, not really. I don't have notes. It's all right up in here. So I want you guys to have all the information that you need to make the best decision and refinance if and only if it is right for you. So I am going to share with you guys some client success stories / case studies. Okay, so case number one. I had someone looking to refinance and they provided me all of their information and I provided them options, okay? And they came back and they said, you know what, we are gonna hang tight right now. So I said, hey, do you mind if I ask why? Well, they said, because the rates are not as low as we thought that they were. And there's not a big enough gap between where we are and where they are now. And so I said, well, would you mind if you give me your calculations and I look at everything? Because you could absolutely be right, but I don't think you are. So being the nerd that I am, they gave me all their information. I stayed up super late one night and I had like, oh my gosh, I think 4 pages of notes, like single spaced notes and calculations, forward, backward, this, that, the other, because you know, I had to take into consideration how many years they paid into their current loan, how many years they had left, how many years they planned to pay on the home, how many years they planned to stay in the home. Were we cashing out and paying off other things? We were. So we were extending some terms and we were shortening other terms. We were taking some things from non-tax deductible interest rates to tax deductible interest rates. We were taking everything to lower interest rates and so on and so forth. So if I had stopped right there with them, which I totally could have, right? They would have missed out, because when I ran everything and I showed them from my angle what everything looked like, how it broke down, the cost versus the savings, the break-even point, how extending this term here actually cost you this much more, but decreasing these other terms and decreasing these other rates broke it down and saved you more here, there, and everywhere. Sounds like Dr. Seuss. But they would have missed out, and they were going to say no to saving over $50,000. $50,000. And why were they going to say no? Because they felt like the rate was not a big enough gap, right? Because you all hear those misnomers. If it's not 1% different, if it's not 2% different, blah, 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 blah. Okay? So that is one case study, and I hope that helps you. Stay tuned for more. So I've still got my glasses handy in case that I need them again, because we're talking about something really cool. But seriously. So here's another case study for you. A client called, and he is a veteran. Thank all of my veterans for their service. And he's a veteran looking to refinance a VA loan. So he had been working with another loan officer and said, you know what, I just don't feel the warm and fuzzies, so I need to investigate this further, okay? Are you ready? He was dropping his interest rate from 4.25%, yes, all the way down to 2.75%. Huge difference, right? Huge difference. Huge drop. It was a bad idea for him to refinance. Remember, your mortgage interest is front loaded. You pay more in the beginning of the life of the loan, right? And because of his long-term goals, as well as his short-term goals, it did not make any sense for him to refinance even with that huge drop in the rate. What are we taking away from this? Know your goals, know your goals, know your goals, right? Know what's important to you and be sure you're asking questions. Even though he was going to drop that rate so much, and yes, he was going to drop his payment because the balance he started with and that payment was based on at the higher rate is going to be different than the balance he's financing now at the lower rate. It seems beautiful, but it's not, because of how long he planned to keep the loan, how quickly he wanted to pay it off, how much he had already paid in. It made all the difference in the world. So don't assume anything, and don't use generic references. Don't use, I can't think of another word besides generic, but don't use generalities when it comes to your money. When someone says, only refinance if this, or only refinance if that, ignore it. Absolutely not correct. There are so many factors that go into this. It seemed like the perfect scenario. It seemed like everything was rainbows, butterflies, and unicorns, but actually, it could have gone either way. Follow me. Imagine that you are taking your rate and you're dropping it right around 1%. Imagine that you are shortening your term, even if by a couple of years. Imagine if your payment's even dropping a little. Extra bonus, right? And imagine if you had your house payment and you had credit cards or auto loans or whatever other consumer debt that's really bogging you down, and you want to use the equity in your home to consolidate some of that debt. Then you'd have lower monthly payments from that aspect too, right? You might even be taking it from non-interest deductible or non-tax deductible interest to tax deductible interest by moving these balances around. So everything sounds amazing, right? It's like a no-brainer. Why would you say no? Well, there are still a million reasons why you might say no. Again, this might be perfect for you, right? But there are some reasons why you might say no to this. As an example, let's say this is a really long-term loan for you, like you're in it for the long haul, okay? So you're refinancing, you're going with 30 years, you plan on living there for 30 years, you plan on not paying it off in less than 30 years, like that's it. It's a long haul process, right? A long haul process. Wow. Yes, You might be taking that credit card balance or that credit card interest rate from 12% down to 3%, right? But you've also just taken it and stretched it over 30 years. So you need to know how long you might pay it off on your own, what that interest is going to cost you in that amount of time, and compare it to stretching it out for 30 years, even if on a lower interest rate. My point to this one is don't have your, we'll do sunglasses again. Don't have your sunglasses on. Don't have your blinders on. Don't assume it's beautiful and everything's perfect. Make sure you know. Make sure you know the plans. Make sure you know the details, right? And it may be perfect, and that's amazing. And there's lots of times where it's really, really perfect. But please just do your due diligence and listen. Reach out to me on social media. I will answer your questions. Even if I'm not doing your loan, of course, I don't care. This is about mortgage education. This is about helping the consumer, even when you're not particularly my consumer, right? So reach out, ask questions, watch the other videos. The videos are free, the checklists are free, and it's here just for your knowledge and consumption. My book is for sale. Of course, that's not necessarily free, but you can check that out on Amazon, called Mortgage Peace. But seriously, message me. If you have any questions, ask your loan officer, do your research, and happy mortgaging. I'm actually going to provide today 5 different links that you guys can click below and watch one or watch all. These are client testimonials of people that I've helped with mortgage financing that are proven track record and are success stories that educating through the process is very, very beneficial. It makes people happy, it gives them peace, and just as importantly, it saves them from wasting money, wasting time, or wasting energy. I would absolutely love your feedback. Drop me a comment below. Has this video helped you? Yes or no? I have a couple other videos for you. Click the link for either one. Hope you enjoy, and don't be shy. Reach out. I would love to connect with you on social media. _the real Stephanie Weeks is my Insta handle. I'm also on Twitter. Let's connect.